Hey everyone, just about 4 weeks ago I updated my list of top stocks to buy right now. If you've been following my channel, you know I've been updating this list all year starting in the first week in 2023. So in this video, I'm going to provide another update on my list of top stocks to buy. If you're new to the channel, it's your chance to become acquainted with my top stocks to buy right now. And I'm going to kind of provide some explainers on why I think my stocks are up so much in the last 5 days. The last 5 days has been great for my 16 stock recommendations. Now, I'm not saying that and I'm not making this video to boast. I'm making this video for informational purposes because oftentimes when a stock price increases significantly, it's a good time to reevaluate that stock, to consider if it's time to sell or if it's okay to still hold the stock. So that's really the main purpose for this video, is because these stocks have increased so much in the last 5 days, some of them especially as much as 30% or more. I wanted to provide an update and let you know if I think you can still hold these stocks. So I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Let's get right into it. Look, here's a list of some of my stocks to buy and their performance over the last 5 days. You've got PayPal in there, Caterpillar, Deere, DocuSign, Fiverr, Etsy, and eBay. And some of the best performers from this group in the last 5 days have been Etsy and Caterpillar. Etsy is up 13.91%, Caterpillar is up 7.2%. I wanted to take a closer look into Etsy. I was also going to look at eBay along with Etsy because they're so closely related. And the interesting point I want to look at here with Etsy is I want to draw your attention here to the take rate. You see in the dark blue here, the take rate is highlighted within its total revenue, and you could see the take rate rising from 19% in the second quarter of 2022. That's up to 21% in the third quarter of 2023. And if I go back further, you could see this has been consistently moving upward. What the take rate is when sellers place something for sale on the Etsy platform, someone buys it, that seller has to pay Etsy a percentage of that transaction. That's the take rate. That percentage is up to 21%. That's a robust percentage that Etsy takes from each transaction. And remember, Etsy doesn't own any of that inventory on the platform. It's another reason why I love the stock, is because it's an asset-light business model. Doesn't own any of the inventory, doesn't need to risk anything, just makes the platform available, encourages sellers to put things up for sale, and then tries to attract buyers. And then from that transaction, Etsy takes a nice 21% from each one. I love that business model. That's why I've been recommending Etsy stock. It's nice to see Etsy stock perform the way it has so far in the last 5 days, and it's performed relatively well throughout the year also. Its stock is still not expensive, so even though the stock is up significantly in the last 5 days, I still recommend owning Etsy stock in the near term. People are spending a little bit less money online right now because they're spending more money away from home on services. Longer term, however, a greater percentage of overall spending is going to happen online. It's just so much more convenient, and therefore Etsy stands to benefit from that trend. Also, keep an eye on that transaction take rate. That's been the same for nearly every e-commerce platform you look at. They've all been raising transaction take rate, meaning they're taking less competitive pressure. They're becoming less fierce competitively. They're not trying to say, oh, well, Etsy's raising the transaction take rate. eBay, let us decrease our transaction take rate so we can attract some of the sellers and bring them to our platform, right? eBay's not doing that. Let me show you eBay here. So here is that same metric for eBay, the net revenue take rate, right? And look at eBay's historical net revenue take rate, 13.9% in the most recent quarter. If you go back, it was 13.1% and steadily moving upward. If I go back to eBay all the way to 2019, this transaction take rate was closer to 9%. So it's been moving this transaction take rate higher and higher and higher. So they're not competing against each other saying, well, if you're raising, I'm going to lower to try and attract sellers. They're not doing that. They're each saying, let's raise the fees, let's all make more profits, and let the sellers think about where they want to sell because they don't have any options to go somewhere at a lower take rate. And so it's been good news, and I like that. And for the similar reasons, I like eBay here, and I especially like eBay at current valuations. And so I would still recommend eBay stock as a buy, even though it's been up in the recent 5 days. I think there's a lot more room to run here for eBay. Here are some more stocks on my list of top stocks to buy. You have 3M, Home Depot, Visa, MasterCard, Target, Stoneco, Altria, Six Flags, and Bookings Holdings close out my group of top stocks to buy right now. The two I want to talk a little bit more about in a little more detail is Stoneco, which is up 31% in the last 5 days, and Target, which is up 19% in the last 5 days. Both of them have reported excellent earnings results, which boosted their stock prices significantly higher. So I wanted to touch a little bit more closely on these two. Starting with Stoneco, in its most recent quarter, revenue growth came in at 25%. But not just that, adjusted net income increased by 4x. The company is generating strong cash flow from operations, and this is stemming from a decision that management made a few quarters ago where they said, let's focus on more profitable customers. Let's not go after any customer. Let's focus on the more profitable customers. For Stoneco, that has been the smaller customers. Let's focus on the smaller customers that generate a higher transaction value for us, and so improve our business profitability. Even if that comes at the expense of slightly slower growth, we're okay with that. And so that's been the motto of Stoneco in 2023, I will say, and they've had good success with that in adding those customers that are higher value, and then being okay with losing some of those customers that are less higher profit. And that's been what's happening. They've been growing in the segment with higher profitable customers, and they've been losing the less profitable customers. And as an investor, I'm definitely okay with that. I'm okay with them focusing on those customers that are more profitable. In fact, I wish more businesses would do that instead of just going after growth. Let's just grow. Let's just get every customer we can possibly get without focusing on, is this customer going to be profitable for us? Is it worth it for us to spend the time, the energy, the money to go after this customer who's not likely to ever become profitable for us? So I'm in favor of this strategy. I like this strategy. And despite the fact that Stoneco stock is up over 30% in the last week, I will still recommend owning this stock. I think there's more room to go for this fintech stock, and I think that it's got a good start. I think it's got room to go. And finally, I wanted to talk about Target. Target reported earnings that were better than what investors were expecting, namely on the bottom line. And again, Target's another company that said, let's anticipate this change in consumer behavior. Let's get ready for this change. Let's get ready for consumers that are tightening their wallets, and let's decrease our inventory, let's decrease our spending, and let's prepare for this. And that cost-cutting effort paid off in the third quarter. The company's adjusted earnings per share came in at $2.10, which is 36% higher than the third quarter in 2022. That's despite decreasing 6% digital sales, decreasing 4.6% comparable stores. And so they've benefited from this tightening of their belt, from reducing ordering new inventory. They've said, let's work through the existing inventory that we have. Let's sell what we have and not replenish as much. And let's shrink our inventory balance, because consumers, it's not 2020 anymore. It's not 2021 anymore. Consumers are not looking to buy things from Target. Consumers are more so looking to spend on experiences that I mentioned earlier, going outside of the house, going to restaurants, going to bars, going to theme parks, concerts, going to traveling, doing theme parks, those kinds of things, right? Remember the popularity of the Taylor Swift concert, right? That wasn't just because of Taylor Swift. That was also because people were eager to get out of the house, experience something away from home after being in lockdown for just about 2, maybe 3 years, depending on what part of the world you're from. And so Target had done a good job adjusting to those conditions. And Target also, longer term, has done a good job aligning itself with the way people like to spend money. Its investments in same day services have worked out tremendously well. It has the best in class same day services, right? Things like buying online and picking it up in the store, buying online and having a Target employee bring it to your car. Target is best in class at that, right? All consumer surveys have pointed in that direction. Others have tried too. Walmart and others have tried this same day services. They're just not as good as Target. They're not as good as Target. Walmart is snagged with a lot of poor customer experiences. You could read the reviews online. Target has done a much better job at this, and consumers are preferring to choose that option because you can get your item in a couple of hours instead of waiting a couple of days to get your item. So Target is another one, despite the fact that it's up 18% in the last 5 days. I still recommend holding on to this stock. I think there's room for Target to go higher still. All right, so I hope this review of my top 16 stocks to buy right now, or my top stocks to buy right now, was helpful. I wanted to give an update on some of these stocks that reported early earnings and their stock price jumped. And so you might be wondering, do I hold it? Is it time to sell now? Is it time to take profits? So far, I suggest holding on. I think these companies, the price increases were justified by performance increases. They didn't just increase just because. They increased because they delivered good performance. They delivered better profits, better customer acquisition, better performance, and so the growth was justified. But before I let you go, if you gained any value from this video, please subscribe to the channel. It really helps me make more videos just like this one. If you're already subscribed, thank you so much. It's truly appreciated. This channel wouldn't be possible without your support. Thank you so much for watching.